Frank Napolitano is here from mortgagebrokersottawa.com. How are you?
I'm very well, thank you.
Good to see you. Like that motorcycle
Lively.
outside, eh?
Bike's beautiful. I mean,
Yeah,
we got lots going on in the studio this
yeah.
morning.
Yeah.
I had to find parking away from.
Is that right?
Normally I get that front spot. Not this morning.
You're telling me that CMHC had a bunch of applications to beat the deadline for the new rules last week.
Well, typically that first week of July is kind of a relaxed week for us, and after the month-end action that happens, but not last week. Last week was as busy as the spring was, and obviously a lot of customers trying to get in under that deadline. So deadline passed, and we're on to the new rules now.
Yeah.
So we'll see how that impacts housing moving forward.
What does that change? The new rules are, first of all, the amortization of your mortgage can't go beyond 25 years, correct?
If it's an insured mortgage. So most of the lenders have maintained the 30-year amortization if it's a conventional mortgage. Okay. So the difference between the two is conventional is 80% loan to value, so you've got a 20% down or 20% equity in your home, and obviously the insured is above that. So
yeah, a little more.
Well, you got to have less of a down payment. You can still buy a house. They still have although I think the rules are going to change on that at some point, but you can still, there's some banks that offer the cashback mortgages that allow you not to have a down payment. So, but I think that'll change, and eventually everybody will have to come up with that minimum 5% down. Fair
to say, though, that you should have at least some money to buy a house. Is that fair?
Most of us have always said if there's some skin in the game, you're less likely to walk away from it, or at least you're going to be a little more serious about it. So if you're saving 5%, if a young individual or couple is saving, or anybody saving 5%, $15,000 on a $300,000 home, putting into it, they're likely not going to be reckless about it. So
yeah.
So listen, I love some of the changes. The one where you can't refinance until you get to 80%. Hey, the problem in the U.S. that consumers there were using their house as an ATM. So every year the value would go up by 10, 15,000, and they take the equity out. So I think the government's saying you can't do that here, and we won't let you do that. But again, I think the 30 to 25-year amortization is going to impact the market. It could drop it anywhere between 5 to 15%. So significant enough. Well, it's first-time home buyers. You're taking a whole bunch of first-time home buyers potentially out of the market.
Yeah. Speaking of markets, if you look around town, this is the time of year when the most abundance of houses are for sale, and you see it everywhere right now.
There is, but I think with the internet and now the fact that everybody can, there used to be 10, 15 years ago where the summer was absolutely quiet. Nobody would list their homes because everybody's on holidays. Now you see an abundance of listings in July and August because the people that haven't sold in May and June are now trying to get it done in before school starts in September. So
which may be a bit of a push.
But there's a lot of listings out there. Talking to realtors, they've got a record number of listings right now in Ottawa. But the sales have been good too.
Yeah, still exactly.
Yeah,
we
still
have a hot market out there. There's no question. Do you think these new rules will cool things off a little bit?
Well, I think from that first home buyer to the second home buyer, there's really very little impact. I think the impact is that initial buyer that's getting into the market, because that 25-year amortization will limit them. What's great right now, though, is I can tell you, I met with a young couple yesterday, and I did a 25-year amortization, and in the first 5 years of the mortgage, 60% of the payments went towards the principal and only 40% interest, where interest rates are now. And by the way, the most important thing now, if you're looking to qualify, the interest rate becomes that much more crucial. Because the interest rate is going to dictate whether you qualify or not. So you better make sure you get the best rate possible out there.
Great information from Frank Napolitano, and get more with his team at mortgagebrokersottawa.com.